everyone. Good morning, good afternoon, and good evening. Welcome to the webinar, Green Finance Supply and Demand Dynamics in the Time of COVID. This webinar is part of the Kenya Bankers Association's COVID-19 Insights for the Banking Industry webinar series. Today's section is jointly hosted by the Kenya Bankers Association, or KBA, and the Sustainable Banking Network, or SBN. My name is Hong Lin Lee, and I work for the SBN Secretariat, supported by the International Finance Corporation, IFC. I will be moderating the questions and comments alongside with our moderator, Ms. Nuru Magambi. A few ground rules first. Today's program is live streamed, and you can send your questions and comments through the session by using the chat function on YouTube. Feel free to send your questions and comments at any time during the discussion, not limited to during the Q&A session. Please understand that we might not be able to answer all the questions due to time constraints. As a reminder, this webinar is being recorded, and the recording will be available online in a few weeks. After the event, please take a few minutes to fill out the evaluation form. Your feedback will help us improve our future events. Today, we have 4 esteemed speakers joining us in different locations, and this webinar will be moderated by Ms. Nuru. Nuru is the Director of Public Affairs and Sustainable Finance Lead at KBA. She has spearheaded the strategic initiatives to reinforce the industry's role of being a core driver of Kenya's sustainable economic development. Without further ado, Nuru.
Thank you so much, Holly. It's so great to be here, and just welcome everybody again. Karibuni nyinyi nyote. So we're very happy to have you all here. As Holly shared, we have a wonderful speaking lineup for you today. Our topic is Green Finance Supply and Demand Dynamics. We're going to spend about an hour and a half in this conversation. So let me introduce you to the speakers and really just reinforce why this is a very timely and important topic. Definitely, we are all grappling with the disruption that COVID has thrown our way, the COVID cloud, as it would be. But certainly, we see a window of opportunity. We see a COVID Kairos. When you think of the fact that most policymakers are charting a way forward towards a more resilient economy, all the conversations are being underpinned by the topic of sustainability. And that's where the role of finance comes in. How do we ensure that we have a financial sector that is supporting sustainable economic growth, particularly in the post-COVID space? So we are happy to have several speakers who will help us think through this conversation and through this topic. And what we hope that you will take away from the discussion is a glimpse on what low and middle income countries are doing in the space of green and sustainable finance. We also will be talking about the role of social and environmental risk management and how regulators are viewing this as a way to de-risk and stabilize the financial sector and the broader economy. We're also going to hear about some trends that our colleague Louise will be covering, and also some case studies on climate change innovators. There are opportunities for innovation, so we should not look at COVID as purely a negative disruption. It is an opportunity to innovate and create jobs as well. And finally, we'll talk about how we can collaborate with development finance institutions and where the opportunities are there. So allow me to introduce you to the speakers. First, we will have Louise Gardner. Louise is an amazing woman who's been working with the IFC for several years, championing awareness, capacity, and insight on sustainable finance, working closely with regulators as well as industry associations in this space. So thank you, Louise, for being here, and we look forward to hearing from you. We also have Edward Mungai. Mr. Mungai is the CEO of the Kenya Climate Innovation Center. We're going to hear about the work that the KCIC has been doing in this country, particularly in terms of filling that financing gap that lots of entrepreneurs and startups are facing in terms of getting access to capital to scale up their ideas. Edward will talk about where incubators and programs like his come in, and the bridge between commercial finance and these programs. And finally, we'll hear from a regulator. We are so happy to have Asif. We're so happy to have Asif Iqbal. He's the Joint Director of Bank of Bangladesh, which is the regulator in Bangladesh. As you know, Bangladesh is a very diverse economy. They are facing similar challenges that we're facing here in Kenya, by the way. We have issues around climate change that's affecting productivity and quality in the agri sector. Same effects that we're facing here in Kenya. Agri actually underpins the economy in Bangladesh. We know about 18 million Bangladeshi face being displaced by rising sea levels. So we're going to hear from Asif what the regulator is doing in terms of guiding the financial sector to be more resilient. At the end, oh, that's me, by the way, I'm Nuru. At the end, we will have an opportunity to get feedback from you. We will have an opportunity to have a Q&A, so we really encourage you to use your chat function to post your questions, so everybody can share and give you feedback on your questions. And at the end, we kindly ask that you fill a survey for us. The survey URL is basically SurveyMonkey/r/KBA 2020. So without any further ado, allow me to ask Louise to share her slides and unmute her line so she can walk through her presentation. Thank you.
Thank you so much, Nuru. It's a pleasure to be speaking to you all today. Let me just activate my slides while I'm doing the introduction. All right.
Perfect, we can see, thank you.
Fantastic. Great, so it's a real pleasure to be chatting to you today, and it's such an interesting topic, and it's one that we've been hearing coming up again and again from the members of the Sustainable Banking Network. So just to give you a bit of background on SBN, the Sustainable Banking Network is a learning platform, an international learning platform for financial sector regulators and banking associations in emerging markets. It's dedicated to institutions in emerging markets because many of these emerging markets share similar challenges and issues. And so it's become an extremely candid and comfortable community for members to share their experiences. It was established in 2012 with 10 countries and 10 regulators and industry associations. And it is now representing 40 emerging markets. I think we have 50 plus institutions, a mix of ministries of finance, banking regulators, central banks, and banking associations. And when a country joins SBN, they make a commitment to launch a roadmap within 2 years of joining SBN. And the idea is that the value of members that members bring to the community is because they share their experience and because they are committed to advancing sustainable finance. And obviously KBA has been one of those champions, and it's always exciting to collaborate with Nuru. So now we have 40 countries, and we represent around $43 trillion in banking assets under management across emerging markets, which is over 80%. So it means that this work on sustainable finance is influencing quite a significant amount of assets. And I think what I'd like to share with you today, and I have just a few slides, is that contrary to what you would expect, that a situation like COVID might have become an impediment or slowed countries down in responding or building on their sustainable finance roadmaps, we haven't seen anything of that. We have seen consistent progress and in some cases acceleration. So what we're seeing is many of our members are reaching maturity where they are connecting the dots that sustainable finance isn't just a nice to have that you do when everything is okay. It's actually a fantastic response to times of crisis, to big challenges that are on the horizon like climate change, and to immediate problems like COVID-19. All right, so what I'm going to go through now is just some of the highlights in terms of what we're seeing and the urgency that's coming through for us. And where some of these insights, well, most of these insights come from a report that we published recently called Necessary Ambition, how low-income countries are adopting sustainable finance to address poverty, climate change, and other urgent challenges. And this report was developed on the initiative of low-income countries, or what we call IDA countries. in the SBN network, of which Kenya is one. So we have 11 countries in the SBN network that are considered low income and would receive money from the International Development Association. And we were interested at the time, this was I think more than a year ago, we were interested to understand what are the dynamics in those countries that would drive them to initiate sustainable finance, when clearly there are other priorities. And you can see in front of you, these are the types of countries that really face very critical issues like fragility, conflict and violence, climate change and natural disasters. For instance, Nepal is in that group of low-income countries. They had a major earthquake in 2015. And we saw that very soon after that, they were once again picking up and using sustainable finance to move forward. So we know that health crises and pandemics fall into the types of things that these countries would be most affected by. We know that these issues are serious, and what is exciting is to see that countries are using sustainable finance to respond. So just to give you a sense of some of the statistics in terms of how many people will be affected, be pushed into extreme poverty by COVID. We also know that if unchecked, climate change could push an additional 100 million people into poverty by 2030. So these are very serious problems that require responses. And it was incredibly encouraging for us to see, even in March and April, as things were unfolding with COVID, that we were starting to see some great developments in our community. So the Central Bank of the Philippines, finally, this is their first major introductory of a policy framework, which they published on sustainable finance, so they will be moving forward. The National Treasury of South Africa, after several years of engagement across all parts of the financial sector. So in South Africa, it's not just banking, it's a unified dialogue for all parts of the financial sector. And they've published a technical paper, and they hosted a webinar linking that technical paper to a green recovery response to COVID. Vietnam has led the Association of Southeast Asian Nations, the ASEAN Capital Markets Forum, to launch its 5-year roadmap for ASEAN sustainable capital markets. So the ASEAN community, they're a fantastic example of a regional approach. And what we've heard in terms of the case studies from ASEAN, and this was several years back, but it seems to still be the case, that sustainability and sustainable finance is one of the topics they find it very easy to agree on. So this is a number of different markets with different priorities, but they agree on sustainable finance and they're pushing ahead. Central Bank of Mongolia, which has been going super quick, they introduced their green bond taxonomy at the end of last year, and they recently introduced their national green loan statistics, which will be calculating the amount of and the ratio of green loans in banks' portfolios based on the taxonomy that they now have. And Colombia and South Africa are both in the process of developing green finance taxonomies. And those are just some of the examples. So these are dramatic moves forward that are targeting the two goals of unlocking capital to address these challenges. So to unlock the green capital, the social and sustainability focused capital that can be pushed towards many of the new sectors, projects, and businesses that could address these challenges. Very exciting. And the other pillar is the risk management pillar in terms of sustainable finance. So how do you also build up the risk management competencies on environmental and social issues, which include health, within your financial institutions? So both these things are happening. And I think speaking to today's topic, we do know even prior to COVID, we knew that there was massive potential for green finance. And just looking, so these are several studies that IFC did over a number of years. The most recent was the one that we're citing here, which looked at a number of urban, so cities and urban sectors in particular. And so Nairobi was one of the cities that was covered in the study. But looking at emerging markets, IFC identified over $29 trillion in climate investment opportunities up to 2030. And that doesn't include sectors like sustainable agriculture. So it focuses very much on things like renewable energy, urban transport, and we'll touch on that on the next slide. So it's things that we know are viable project pipelines for investment, and tying that to the nationally determined contributions that countries have made under the Paris Agreement. So that's what we know. So the known requirements give you a number of 29 trillion in emerging markets. But to meet that target, IFC estimates that we would have to shift the percentage of green finance in banks' portfolios from the current, conservative average or hopeful average of 7%. So saying that, sort of the numbers that we have in terms of green loan portfolios in banks currently in emerging markets, if we were to say it's around 7%, that needs to grow to 30% by 2030 in order to meet those targets. So that means there has to be a serious ramping up. So just to give you an idea of what that looks like in Kenya, and there's a quote from Nuru on the side there, and I've highlighted that part of Nuru's quote, which says, a collaborative approach is necessary to shift the global and pan-African financial system to become a primary enabler of sustainable development. And I think that is something we're seeing again and again. So within the Sustainable Banking Network, the collaboration between regulators and banking associations to create a shared vision of what sustainable finance needs to be, as well as collaboration between the financial sector and the real sector to generate the pipeline and the deals to meet the potential that we're seeing. So here's an example for you. In the case of Nairobi, it was identified that green buildings could offer $1.1 billion in potential, renewable energy, 240 million, electric vehicles, 5 billion, urban water, 360 million, waste, 140 million, and public transport, 1.6 billion. So this requires banks to develop their capacities to identify these deals, create these deals, and for the real sector to be organizing themselves in response to that type of finance. We've also seen green bonds emerging as an incredibly popular tool, and that's a whole different webinar and presentation in itself. We do have resources on the SBN website, but we're seeing the green bond market grow rapidly. We're seeing more and more countries in the SBN community introduce green bond frameworks, including Kenya. So to provide the legal regulatory framework for the issuance of these green bonds. And in South Africa, we've seen that has moved things quite quickly. I think Nigeria as well. And Morocco is the other African country that has the framework in place. So we see that once the framework is in place, the financial sector starts to catch up, the rules are clearer, and then you can start generating more of these types of deals. We're also seeing a shift from green to social and sustainability. So how am I doing for time, Nuru?
You have 10 minutes.
Okay. All right. So I think to bring us back to the trends that we are seeing, particularly in low-income countries, the report Necessary Ambition, which was published in June, was the first comprehensive deep dive that we did into what the experiences of low-income countries are in developing sustainable finance frameworks. So what is driving them? Where is the stimulus coming from? And what are the types of issues that they're focusing on? So this gives you a sense of how low-income countries, which are highlighted in orange in these boxes, they're the 11 low-income countries in the Sustainable Banking Network. This image comes from our Global Progress Report, which was published in 2018, which is a systematic comparison, benchmarking of all the countries in the SBN network in terms of how far they've progressed on their sustainable finance journey. So we don't expect people to go from 0 to hero in 1 year. Some do. Mongolia did their framework extremely quickly. But often there is consultation, work that needs to be done, engaging with local stakeholders, developing a national strategy, and then over time introducing regulations, and then implementing those regulations and implementing monitoring and evaluation frameworks. And what we often see is, for instance, there might be a voluntary approach from the banking association, but then the regulators come in and they help to move these types of things forward. So this gives you an idea of how far low-income countries are progressing. And you'll see that the low-income countries are definitely not at the back. We're seeing them spread out through all the categories, and at least 4 are in the advancing stage, including Kenya. So we wanted to know what enabled these countries to progress so far. And as I mentioned, we know that there are 2 different approaches generally from these countries. It can either be the stimulus coming from the regulator, and we'll hear from Bangladesh shortly, and Asif can explain how Bangladesh Bank has driven the momentum in Bangladesh. But for instance, in Kenya, the Kenya Bankers Association has been extremely active. In Nigeria and Mongolia, we saw very quickly the regulator and the banking associations teaming up and coming up with a shared vision. And we see that this is the most effective approach over time because you require the regulator to offer a level playing field. Sometimes it's also very useful if the regulator can provide guidance. And most importantly, the regulator should be supervising and engaging with financial institutions over time to help push these things forward. So we're seeing that particularly in low income countries, this is happening. There is momentum. But what's very interesting is there's a strong urgency that it relates to environmental challenges that the country faces, and it links to things like financial inclusion, investment in SMEs, and agriculture. And now we're starting to see that things like COVID also increase that urgency. And then for those of you who are interested in reading further into the report, it goes into the case studies of exactly the steps that are taken. So you can get an understanding of how things build on each other at each phase of development. But maybe just to wrap up with the key findings from the report. And I think the take-home message for us was we were finalizing the report to be published just as COVID was taking off. And we wondered, is this timing appropriate? Should we hold back? Should we wait until things calm down? And reflecting on the case studies and the lessons learned, we actually found that no, this falls very much into the category of, as the title says, necessary ambition. This is about developing financial systems that help you respond to these massive challenges. And so these are the things, these are three key lessons that might be useful in this case, which is about pipeline and green finance. And the lessons were plan for broad stakeholder engagement to help create well-tailored policies, definitions, and standards that bring everybody onto the same page to facilitate the deal making that you want in order to respond, to create and respond to these pipelines of deals. Support banks with additional guidance to build capacity. Green finance requires a steep learning curve, and many banks are very eager to get on board, but it does require staff capacity building. These are new roles, new programs, new opportunities within the banks, and the regulators and the banking associations can play that role. And then I think in this case, I think Noor has also mentioned previously the role of international institutions like the IFC and others who are acting in a capacity building role. Now, IFC is an issuer of green bonds, for instance, also an investor in green bonds, and works actively with banks to build their capacity and help them issue their bonds. So that's just an example of ways in which we can start connecting these dots. I'm going to stop there. For anyone who would like more information, you can visit our website at ifc.org SBN, and the report is available at ifc.org SBN Necessary Ambition.
Wonderful. Thank you so much, Louise. As I ask Edward to start sharing his slides and unmute his line, I think just really just reinforcing the message that you brought up, the fact that issues around green finance and sustainable finance are very much at the heart of the COVID recovery and post-COVID economic stimulus programs that policymakers are working on. You highlighted issues around what the central banks and capital markets are doing to create taxonomies and other various policy frameworks for the sector. And obviously you highlighted the issue around capacity building. And I see a question here from Samuel Marima asking, how do we get the financial sector to move from a 7% portfolio to a 30% portfolio? And we're going to talk about that later on during the Q&A, because I think Edward is going to tee that up as well. But definitely we see that COVID Kairos, that window of opportunity for sustainable finance, because we're all now thinking about sustainability differently. I think for a long time we were looking at sustainability purely from an environmental perspective, mostly from an environmental perspective. But now because of COVID, we've seen how very quickly a social issue, a health issue can ripple right across the economy and even touch on the environment. Now we're seeing environmental concerns in terms of how are we disposing of rapid test kits, how are we disposing of the surgical masks. So definitely there are those environmental concerns that are coming out, and we've been able to see how the social dimension of sustainability can come to the fore and really displace the environmental and economic perspective. So really, without any further ado, Edward, let me pass over to you. You can unmute your line. Thank you.
Thank you, Nuru. I think I'm out of mute, and really the idea here is, and by the way, thank you very much, Louise, for the very an insightful presentation, very useful elements there. And I want to carry on from where you stopped, because my job at Kenya Climate Innovation Center is really to help the small and medium enterprises to be able to tap into this financing. But then it's a tall order for to be able to get the financing. And therefore, my job really is to try and see how can I make them to be more investor ready. Therefore, they can be able to receive this money. And of course, it's also for the banks to see another commercial lenders to see them as less risky. Now, that said, Kenya Climate Innovation Center, we started in 2012, but we are registered as a company in January 2015. And remember, this was an initiative of the World Bank through what they used to call InfoDev, climate technology program, and was proudly funded by the Danish people and the UK government. But subsequently, as you can see from my slide, I have 3.0 there, is that KCIC now is on strategy 3.0. And basically that strategy is a 50 strategy, which really is about helping enterprises within renewable energy, within agribusiness, within water, within waste management, and within commercial forestry to be able to tap into the resources that are available there in terms of financing, and also for them to help us to deal with issues of climate change. Well, indeed, this is a slow pandemic which is happening, and yet we need to take some actions towards it. Now, that said, we do support close to about 300 enterprises, and I just picked just a few examples of the opportunities in terms of financing that we've got and which are helping us to mitigate or adapt to climate change. But I think more importantly is that they are tapping into commercial financing, because these are all green companies. Well, it's about ethanol cook stoves. This is a brand new technology or brand new kind of offering within our country, probably 5, 6, 7 years old, which again, we kind of championed in the beginning to just try to see how can we people be able to move away from cooking in the old way to a new way. Energy efficiency is critical. Solar roofing tiles is a concept which we are embracing and which we are taking forward. Solar irrigation system, and quite a bit of agriculture, because agriculture is the backbone of many of our economies, and therefore we must be able to green it. We must make it climate smart agriculture, and that way then we can be able to resolve quite a bit of things. Well, biopesticide production and organic FMGs, this is FSCMGs. These are critical areas that we are also working and trying to see how can we be able to help. Of course, these businesses have not been spared by the COVID consequences, and well, that also gives us a little bit of sleepless night to see that some of the enterprises that we have built for the last 7 years are and could be challenged because of the various, as you can see, the various concerns that they are facing. For instance, they have cash flow constraints. They cannot be able, because of social distancing, because of closure of boundaries, they can't be able probably to put their products into the market. There is a lot of delays in shipping and logistics, and therefore their supply chains again are really challenged. There is also challenges in meeting supply chain obligations, and of course mental wellness is also a big thing. We are not talking a lot about it, but yes, it is a concern. And when you look at the enterprises, well, you realize that 39% of our clients have actually been significantly affected by the COVID-19, whereas 28, and really this is a sample of about 120, but it shows you what kind of challenges we are facing. Now, what is the responses? Of course, we need people with financing to start looking at it from a different perspective. They need to look at it not from the plain vanilla kind of lenses, but they need to look at how can we be able to provide financing at this very dire moment. And therefore, as an organization, we are trying to set up together with like-minded people an emergency fund that would then be able to support these businesses. Of course, we have to move our services more virtually these days, so that then we can be able to interact with them, of course, because we are most of the time we are social distancing and we are working from home, again, as a result of the pandemic. Of course, counseling services, I said mental health is critical. And these entrepreneurs, these innovators, they need our support in regards to that. And this is something that we are supporting. And really, why I wanted to put this slide is just to say that, well, there are some challenges, but at the same time, there is a lot of opportunities. And when I look at the opportunities, looking at what is it we stand for as Kenya Climate Innovation Center. And these are the things which are making financiers to be able to put in money. And just to give you an example, Since inception, we have kind of leveraged, meaning we have gotten money from private sources coming into our business, totaling about 55 million US dollars, meaning that we have attracted money into these businesses, green finance worth 55 million dollars. But how did we do that? This is basically because our job is really to de-risk these enterprises. And how do you de-risk them? You de-risk them by providing these 5 services that are put in front of you. Let's first talk about advisory services. You realize that many of the people who are coming up with this concept, they are not necessarily business people. They need training, they need capacity building, they need to be helped. And when you go to a bank for application of a loan or a private equity fund or any other financial, the first thing they want to understand is, do you have the capacity? Now, if you don't have the capacity, it is our job that we are trying to make you investor ready by providing you with that capacity, and therefore then you can be able to go and speak the language that these people will be able to understand. Of course, enabling environment is key, and this to me is the elephant in the room, because basically what it is that innovation all over the world is 2 steps ahead of policy. What that means is that we will come up with brilliant ideas, but you know what? Government will not allow us to put those products into the market, because there is no standard, there is no policies about what we have invented or what we have innovated. And therefore, we have to work and talk to government to make sure that then we have proper mechanisms that will help us to push this thing forward. Access to information, may it be market information, may it be technology information, and also finance information, because all these things is kind of a dilemma. Many of these entrepreneurs, many of these innovators, they still don't have information. They need to know, can you be able to match them? Of course, things like facilities is another element, and especially intellectual property rights. You realize that many of them are actually going to their graves with their ideas only because they don't want those ideas to be stolen. So it is upon ourselves to try and provide a mechanism how we can be able to protect them so that the ideas can remain theirs and they can be able to benefit. Of course, outsourcing some of the services in testing and prototyping. But more importantly, let me talk about finance, because this is where now we have kind of tried to be a little bit innovative, where we come from what we call proof of concept, meaning that you just need to show up and you say, I think I can be able to do this. Of course, if you go to a bank and you tell them you think, or a private equity fund, they will never listen to you. So in this case, we open our ears, we listen to you, we give you a grant of 50,000 courtesy to our donors, European Union, Danish government, UK government, and IKEA Foundation, who then will be able to, once we give you the 50,000, we walk a journey with you. We try to discover what is it that you're trying to make. Now, imagine if you fail. If you fail, it's fine, 100%. We write a story. Nobody will try that kind of a mistake again. But if you succeed, you open up more money. And that more money you open up is what we call early stage financing mechanism or facility, which then takes you to the market. It helps you to make a few products. And now you can start seeing banks wanting to have a relationship with you. You can see financiers wanting to have a relationship with you, because the risks are getting de-risked. You know, you are getting less and less risk. And eventually, if you succeed even more, then we have a fund which is called Kenya Climate Ventures. And Kenya Climate Ventures will give you up to a maximum of $700,000 commercial money. But in most cases, we are actually doing this together with commercial banks, because now you are doing well, there's no much risk, and everybody want to be getting into. And this is the point. This is where we are unlocking this climate financing in the market. Because then if you still continue with the idea, nobody supported you with your idea, then you wouldn't have gotten into that point. Of course, if you require more money, more than 700,000, we will hold your hand and we'll walk to commercial banks, we'll walk to funds, we'll walk to DFIs, and you will be able to unlock more financing. And this basically what I was saying is kind of what I call a conveyor belt mentality. As we do financing, we must think about it as a conveyor. We, in the smallest way, we are looking at it as a conveyor where we start you with incubation and we drip a little bit of money, sometimes free money. Thank to the fact that we have financing which is more softer, which is blended. We give you proof of concept, then we move you to acceleration when we start seeing signs that you're moving in the right direction. And of course, if you are not moving in the right direction, we quickly cut our losses and we tell you goodbye. And again, we write the story. But if you are going up, then we accelerate you and you have early stage. And if you get early stage, you then move to impact funds. And before you know it, banks are actually looking for you. And that's how then you unlock money. And I think this is a model that this conveyor belt method or mentality is something that I would really recommend to financiers to look at it from this perspective. This way, then we have collaborations. Nuru, thanks for the word. collaboration, because this is what is required, so that then we can be able to put money into these businesses. Now, I'm not just talking out of there. I have two examples here that really have shown us that it is possible. For instance, Peter Chege, the guy who is reducing water usage in arid and semi-arid areas and increasing farm yield, is really making what is called hydroponic system. He started from a proof of concept. He thought he could be able to do something and solve a challenge which was existing. Today, he have expanded into 3 countries. I think he's in Uganda, he's in Rwanda, and also doing a little bit in Somaliland, you know. And he have received money from banks. We gave him proof of concept. We gave him early stage financing. He got money from KCV, which is Impact Fund. And now Peter is a happy guy who is putting, I think the last thing he raised was about $1 million. Again, this is doable. Then the picture on the other picture about flexible and affordable biogas. This is a company called is a biogas company which we are supporting, and indeed is from Mexico but registered in Kenya. And what we have seen is that we gave them a little bit of money through Kenya Climate Ventures. We de-risked them, but subsequently they have been able to raise a lot of money. It's Systema Biogas, which have been able to raise more than $10 million of funding from different sources, so that then they can be able to invest. So truly, friends, what I'm saying is that there's a lot of opportunities. We can actually be able to unlock this opportunity, but there is some boundary conditions. And some of those boundary conditions is that we must definitely look at it from a collaborative way. That collaboration is where, depending on the financing type that you are having and the risk appetite that you have, some people don't have so much risk appetite. Others, like ourselves, we have quite a bit of risk appetite. Let's join hands and try to drive this sector and to see whether we can be able to move these things forward. Of course, the other second thing that is very important is not just about finance. You know, we keep on saying that finance is everything. Finance truly is not everything. What we need is that we need technical assistance to be embedded in whatever we are doing. Note that many of these people are not business people, and where they are business people, there are so many skills that they still want to acquire and which would help their businesses. So in that case, we must be able to have our boots on the ground. We must be able to roll our sleeves, and we must be able to put them so that then we can be able to move them to the next stage. And friends, those to me are the 2 key points that then we have to look into as we try to move this sector, as we try to address the issue of climate change, and as we try to embark on green financing. Thank you very much, Nuru.
Thank you so much, Edward. What a wonderful presentation, and you've covered so much, and the case studies were especially interesting. And indeed, there are very many opportunities. You touched on the opportunities as Asif gets ready to make his presentation. You touched on the opportunities within agriculture and energy, but definitely within manufacturing, which feeds into, or I should say, agriculture feeds into. Edward, if you could stop sharing your slides. So definitely within manufacturing, which pulls from the agriculture sector, there's opportunities for that, and transportation, and there's so many other sectors where there is green content in them. And it's quite instructive that you shared that 39% of the entrepreneurs and innovators that you're working with feel the COVID impact, which to me, I always try to look at the opportunity and the upside. And that means you have more than 40% that have not been affected by COVID, which is quite interesting, right? So that means there is that aspect of resilience that sustainability brings in. Do you want to touch on that quickly, Edward?
Yes, Nuru, yeah. So, well, again, as you say, there's some of the businesses for sure, they don't have the consequences of COVID, and it depends on what sector you are in and what kind of work you are trying to do. And therefore, then that's how they've been safeguarded. But the key point is that, Nuru, it's all not lost, you know, and this is something that I've been trying to tell my that it is not all lost. There is opportunities that we can't be able actually to unlock as a result of COVID. And there are many things we can be able to do. Just the other day, we had a cohort that we are calling for agri-bees, trying to support the young people and women in agriculture and climate smart agriculture. And in this case, we had expected, well, we would get 100 cases. We got 200. And this is to show that at least people are becoming more creative and they are more outward looking, and therefore they are not just sitting at home and saying, oh yeah, this COVID-19, you know, they are thinking and they are putting things into the market, and that's how then we are supporting. So indeed, there is an opportunity, and we could be able to cash onto it.
Indeed, and I love this story of the gentleman who had an idea and now has been able to raise $1 million in financing. And it touches on questions that Robinson and Samuel have raised as well, but we'll get to that. So Asif, over to you. Please unmute your line, and we look forward to hearing what's going on in Bangladesh.
Thank you, Noor. Thank you very much. Good morning, good afternoon, and good evening to everyone who are hearing this session. And thank you very much for joining for a very nice presentation and sharing the context of the Kenya. And thank you, Louise, for elaboration of the SBN context and SBN member country context. Currently, we are having in Bangladesh, we are having a situation, and unfortunately, we have already faced a cyclone a couple of months ago. So apart from that COVID situation, this cyclone and flood situation has made us realize that sustainability is still the heart of the financing in context of a developing or least developed country like Bangladesh. So in the since the beginning of the COVID situation around the world, I have been reading a lot of materials. In many cases, some is arguing that we have to look into the economic recovery and restoring the first, then we have to look at the other context. But after analyzing different country situation, we are confident that sustainability must not keep behind in the context of COVID. Let me explain why. Because if we go back to the theory of the Build Back Better, which was framed in the Sendai framework back to 2015, which is proposed by Japan, if we look back to the Build Back Better, in that framework, it is clearly mentioned that any recovery from any type of disaster, whether it's man-made or health-related or natural disaster, it has to be done at first by disaster risk reduction. That means in context of COVID, which we are telling about the containment, then it will be community recovery and effective implementation of economic and the social and environmental plan. And how we'll do that? We have to build our physical assets as resilient, because we not only want to go back to the earlier situation, but also we go back to the better situation. Whether we, in context of the COVID, we have to ensure that the new normal will be much better than the old normal life. So in that case, we must focus on the sustainability into the economic and the health recovery system. And in case of sustainable finance, in case of sustainability, we are observing a looming challenges. This is waste management. In case of waste management, we are observing that a new type of waste hazards are coming, because in case of the COVID, a lot before COVID, medical waste were only limited to the hospitals, community clinics, or the medical centers. But now we are finding that the medical waste, like masks, like many other things, are becoming a part of the household life. So how we'll have to disaggregate this waste, and how we'll have to keep these waste in the new modality of the waste management. And without supplying the financing into the waste management, this will create another risk for us. So if we don't put much focus on the waste management in context of the COVID, because now our definition of the household waste has been changed a lot. And also the community waste, because in our country there is not, where awareness rate is not high. Many people are throwing their masks here and there, so it is creating another type of health risk in context of country like Bangladesh and Kenya. So we have to look into this. We have to plan that, and we have to drive away the financing into the restoring of these activities. And moreover, which we have found that in case of the lockdown, which we have been experienced, that keeping the utility services like electricity, supply of the water has been a great challenge. So if we could ensure the renewable energy and energy efficiency at the household level, for an example, if we could ensure the backup supply of the renewable energy to the majority of the households. So in that case, during the lockdown period, we could limit the fossil fuel based on-grid electricity supply. So this has taught us that weight of the renewable energy must be increased. Without increase of the renewable energy, we cannot handle such situation further. And moreover, energy, in context of the energy efficiency, we have found that in case of the lockdown situation, keeping the momentum, because if we want to keep people into their door, we have to provide a consistent supply. So keeping the energy efficiency will actually make the electricity generation more effective. So driving the financing into the renewable energy and the energy efficiency has been gaining more weight in this context. And moreover, what we have found that in our country has been ensuring food supply through a very much safe and a healthy system. So in this case, we have been found as another challenge is usage of single-use plastic has been muchly increased. So we have to provide more incentive to the alternatives of the usage of plastic, because to avoid the contact, whether people will not be dependent on the plastic usage. This is another challenge. So we have to encourage the usage of the thick papers and the jute induced fibers to replace the plastic. So single-use plastic reduction will be a greater challenge in context of COVID, and we have to flow the financing to that horizon. So in this context, we have to put more weight to the social and environmental risk management in context portfolio, because now we are seeing that whether many banks will financing the new the definition of industries which has been evolved the COVID situation. So in this context, if we cannot ensure the social and environmental risk management properly, new type of portfolio risk will be arise for the overall credit management for the banks. Let me give a small example. You will find that the new types of businesses are evolving, very new type of, which are providing new for an example, providing masks or the health materials at the lower cost. So we have to ensure that proper social and environmental risk addressing will be properly addressed in context of designing the business. And in context of Bangladesh, I can tell that during the COVID management, number of regulatory forbearances have been provided to banks, but we have not yet provided any regulatory forbearance in context of ensuring social risk management, because we believe that without having the proper social and environmental due diligence, their portfolio will face a newer risk. Because in the context of the COVID, this tightened economic situation have made the bank's portfolio situation in a very tidy situation. They are facing challenge increase the profits, but if they will compromise the risk management, we feel that the profit will be lessen in the longer term. And in context of the COVID situation, in a nutshell, we have to look into that. We have found that the many big industries have faced bankruptcy. So sustainability has come to another great extent, because sustainability is not only about the environment and the society, but also about the sustainable earning management of the businesses. So businesses have to learn that how to make a sustainable businesses to be through being responsible to the society and the environment, so that if another critical situation like the COVID will ever be happened in the future, so that we could keep our economy and the businesses much in better and resilient position like these things, so that we can build better back in the future through our sustainable and better business management. So I will stop up to this now. I'll be happy to answer any of the questions from the audiences. Thank you very much.
Thank you very much, Asif, for your very concise and comprehensive view of what's going on in Bangladesh. I had mentioned at the beginning this issue around rising sea levels and how it's affecting your country. And indeed, you've just shared with us about the most recent cyclone So our apologies, and we are together with you, and hopefully the Bangladeshi citizens are able to overcome these challenges, which must be very difficult, especially in this COVID time. But thank you for giving us that regulatory view in terms of the Build Back Better framework that was introduced in 2015. Indeed, Japan, I'm sure, as has Bangladesh, has experienced several extreme climate events that have affected the economy. So definitely the Build Back Better framework has become the go-to reference point for policymakers, and definitely then therefore puts this issue of sustainable finance and green finance at the heart of the recovery. We're going to switch gears and go to the questions and answers. We have so many wonderful questions that have come up. I'm going to allocate them to the different speakers. And if you allow me, I'll try to bunch them together just based on the thematic areas that have come up. But meanwhile, I'll kindly ask everybody if you could go to surveymonkey.com/r/KBA 2020. It's a very quick survey. It's going to take you less than 1 minute to fill the survey, just so we can get some feedback on this session. And I know we've covered a lot of ground in a very short time. We only have about 18 minutes left in this session. So we've got a question here that I'm going to point to Edward. So Edward, if you can unmute your line. There's a question that's been raised by both Robinson and Samuel, and it's all about this issue about how do we promote green finance? How can we promote banks and encourage banks to get more active and move from the 7% of the portfolio allocated to green to 30% of their banking portfolio allocated to green? And this, of course, is referring to the slide that Louise raised. For me, I think, as you're getting ready to respond, I think there's several issues here. I think there's the issue of, I think the banking industry is now getting alive to the fact that banking is all about collaboration. Banking in the future is all about collaboration. We've seen banks and fintechs collaborate. We've seen banks and development finance institutions and impact investors collaborate. And I think that is probably going to be one of the key aspects in getting more banks to participate in the green and sustainable finance space. I think the issue about risk, of course, is a key issue, especially now because of COVID. We're seeing rising NPLs on our portfolios, both on the digital finance space and commercial finance, regular commercial finance. So therefore, collaboration is very important to bring in and introduce peer accountability frameworks, which can help de-risk some of these portfolios, definitely bringing in more patient capital, either through the pension sector, which ideally should be structured as a longer horizon than your deposit base. And definitely, Edward, you touched on blended finance. So could I ask you, Edward, to talk about how do we get more collaboration? How do we get more activity, some cross-pollination between the development world and the commercial finance world? Edward, over to you.
Yeah, I think, Nuru, I'll start from where you just stopped. Well, you are talking about collaboration. I think these public-private partnerships that will be foreseen and that will be able to help in development of green financing will be key, where I want to see more banks collaborating with people like GCF, collaborating with Jeff, collaborating with UNEP, collaborating with the IFC, and all these mechanisms that are there that can be able to help them to start thinking about how can we, may it be green board, may it be equity, which is more focused within climate financing or green financing, and hopefully then with that they can be able to take some very good examples there. Well, of course, the other thing that we need to do, Nuru, and you have been trying to some extent doing it, is capacity building of banks. And they have to understand that what we are calling green financing is not necessarily plain vanilla finance. We don't look at these kind of things the normal way we look at any. And therefore, because of that capacity building, they will be able to open their boundaries and they will be able to see opportunities which then they can be able to plug in, and hopefully we can see more green financing happening. I think also the idea, and this is something that I've actually been struggling with in KCIC, the fact that there's no awareness. And the awareness I'm talking here, I'm talking from the demand side. Let me put it differently. When I'm working in KCIC, my job is really to work with entrepreneurs so that they can be able to bring products into the market. Now, as they try to bring those products into the market, the other concern that I obviously have got is that who are the customers? Do we have customers product? And that is the market, that is the awareness, that's the demand that we haven't created. So again, both these collaborations, commercial bank, development partners, we must figure out how can we be able to create more awareness so that then we can have more people thinking green, and therefore we build the demand. And once we build the demand, not necessarily of finance, but for products, then banks can actually be able to come in and fund that demand. So that will be very critical that we create this awareness. Then it's also about supporting the public sector. And I think this is for development partners. They must be able to support the public sector so that the public sector can come up with incentives, can come up with an enabling environment which will enable EcoBank, will enable Kenya Commercial Bank, which will enable other banks to look at green financing as an alternative, as another way of funding, you know. And that those incentives will be very useful. And finally, Nuru, something that we've been doing together, this is Catalyst Awards. I think Catalyst Awards need to showcase more examples of what commercial banks are doing in that space of green financing. And once people start seeing where it's doable, then we can see more and more people actually doing it. So Robinson and I think the other gentlemen, those would be my key my key efforts that I would put my money into, so that then I can be able to see more and more commercial bank thinking about green financing as opposed to traditional financing.
Wonderful. Thank you so much, Edward. There's a question here that I'm going to point to Louise that's been raised by both Christine and Lanra. I hope I'm saying it correctly, sorry. And it's the whole issue about capacity building, and Edward has touched on that as well, in terms of how can we encourage and build more capacity and awareness for the commercial side, the commercial finance side in this space around green and sustainable finance. May you touch on that, please?
Although, no, I think KBA also has a fantastic track record in terms of building capacity, so it's hard to improve. But what I am going to do is I've put together a quick list of useful links, and I'll share that, and Holly can share that with the YouTube live stream. There are resources out there. I think you can equally complain that it's not always easy to find the resources. So here are some good resources that you can use. IFC has more than 20 years of experience in doing green finance. I think it's important to point out the link here between environmental and social risk management and the business opportunities, because they are connected. So some of the links that you'll see actually blend the two, and to build capacity within the financial institution to understand environmental and social performance in the deals. And I think maybe Asif can also back this up, because it starts with building the capacity of the bank to assess environmental and social performance in deals and manage those risks, but that immediately leads to then identifying opportunities. Then obviously, once you're identifying new types of deals that are opportunities, yes, there are some particular types of expertise that come into different things, whether it's new renewable energy or green building, and how you finance those things. And so the resources, the links that I'm sending you will contain some of those resources. We're seeing that there's no one size fits all in terms of capacity building. So there's general awareness raising, and then very quickly within different roles within the financial institution, there needs to be a kind of an ongoing capacity building. So certainly IFC, if you're ever looking for resources, we'd be more than welcome. More than happy to address your questions directly. So please feel free to get in touch with us.
Thank you so much, Louise. Indeed, there are very many resources. So if you're in Kenya, Kenya Bankers Association has the Sustainable Finance Initiative e-learning platform. We've hosted more than 30,000 learners on our platform. About 28,000 plus have finished the core curriculum. And just last year, we loaded a new module on green bonds. It's a very interesting, very quick module on green bonds. So if you're in Kenya, working for a Kenyan bank, you definitely would have access to that. I think the case is the same in different countries. I know Ghana, Nigeria, Liberia, there are various capacity building programs. supported by development finance institutions like IFC, FMO, ITC, which is International Trade Center. So they're definitely, if you're in the sector, they're capacity building programs. If you're in the capital markets, definitely through the Sustainable Stock Exchanges Initiative, there's lots of training there. UNEP-FI, the UNPRI. So there's lots of trainings. So thank you, Louise, for assisting us with that breakdown of capacity building opportunities. And then obviously the universities as well. University of Cambridge, University of Frankfurt have very good capacity building training and certification programs, and the Institute of Bankers as well. So I know we've thrown lots of resources at you. So that's a long way of saying there's lots of information online. So we encourage you, Christine and Learn, to look at that. Shifting gears, Joy and Zhao have raised the question that I'm going to point to Asif and also Edward. They raised the question around tools for de-risking businesses, particularly in the green space during this COVID experience. We know that NPLs are rising. We know that in lots of economies, which are not dollarized, but they are being affected by currency fluctuations. So how do we de-risk a lot of this capital? So can I ask Asif to unmute his line and talk about, from a regulatory perspective, what kind of de-risking are we looking at? And then Edward, you can touch on what you had talked about earlier, the role of organizations like yourselves in helping commercial finance de-risk their portfolios. So Asif, can we ask you to start?
Thank you very much. In Bangladesh, since the start of the COVID, we have put the de-risking issues in 3 years. First of all, providing the banks with ample liquidity supply through cutting down the policy rates like purchase agreement rates, bank rates by more than 100 basis points, so that they can have ample liquidity to provide loans. And another thing is that we have issued some regulatory forbearance in context of loan classification and stress management, so that they have some breathing spaces. And moreover, we have recently created a credit guarantee scheme for the micro and small enterprise loans, so that the bank, so that the central bank, as a credit guarantee scheme manager, they will share the risk of the micro and small enterprise loans of the banks, which will be provided as a collateral free loans, and in that case women financing will be given preference. So that we have another window that we have created almost more than 50,000 crore Bangladeshi Taka refinancing scheme to provide liquidity, to provide funds to the banks at a reduced rate, so that they have access to the lower cost of fund, de-risking the NPL and risk other credit management situation due to COVID happening sector in Bangladesh.
Thank you so much, Asif. I think we've seen similar activity in different countries. In Kenya, definitely as well. We're working on a credit guarantee facility for micro, small, and medium-sized businesses. And there have been policy interventions introduced by our central bank as well, in partnership with the Kenya Bankers Association, to look at lowering the liquidity challenges that banks are facing in terms of lowering your cash reserve ratio, so as to open up some liquidity for financing to specifically support SMEs that are affected by COVID. Edward, could you please also touch on this area?
Maybe I can say a few things, and specifically on what we are doing as an organization to try to help de-risk the challenges that COVID is bringing about. Well, one, as I said in my presentation, is that we are coming up with an emergency fund, which then will be able to put money into these businesses. I showed you that one of the biggest challenges our businesses are facing is cash flows. So we must be able to come up with a way that we can be able to put in some cash into these businesses, of course, courtesy of our funders. The other issue is about in terms of restructuring of the fund usage. And this is a big one, because before, and some people we had commitments with, we had allocated a certain amount of money, and that was described how that money would be used. But now we are a little bit, we are saying, well, you said you needed money for capital expenditure. We are going to change that, and probably you can pay salaries with that money, is as opposed to sticking to the capital expenditure that you had intended. And that gives a little bit of flexibility to these enterprises. Of course, next to that is also in terms of the terms of the loans and terms of the funding mechanism that you are providing. Also, we have been very flexible, of course, on a case-by-case basis, and trying to see how can we work with these enterprises so that then they can be able really to be resilient during these times of COVID. It's also important to note that those are more like preventative measures, but also we have new programs that we are coming up now, which then will be able to put brand new programs. People who have never given money, we have never given money, now we are going to give them money because of these new programs, which then will put money into the enterprises, and hopefully then it can be able to help them survive the COVID-19. So those are some of the practical ways that we are trying to deal with the COVID-19 and our enterprises.
Thank you, Edward. There's a question that Robinson has also raised in terms of incentives, and I'll ask Asif to unmute his line. Which incentives are there to encourage commercial banks to venture into this green finance space? And maybe I can touch briefly on Kenya, and then Asif, maybe if you could touch on Bangladesh, and Louise and Edward, feel free to chime in as well. But in terms of the tax incentives that we have been able to push through, the first one that actually came through was last year, where through the Kenya Green Bond Program, which is a program supported by KBA, Nairobi Securities Exchange, Climate Bonds Initiative, FSD, Africa, FMO, and we have other partners as well, including IFC and WWF. So through this program, we were able to advocate for the introduction of a tax incentive for green bond issuers. So now, if you invest in a green bond, you wouldn't have to pay the withholding tax, which actually worked very well for the Acorn transaction. Acorn issued the first green certified bond in East and Central Africa. Acorn is based here in Kenya. They're a property development company, so they were able to raise $40 million to finance the establishment of purpose-built green student housing. And indeed, Edward had talked about earlier, and so did Louise, about the rise in green building and green infrastructure. So this tax incentive actually helped the Acorn transaction tremendously. And I think it was one of the first in Africa. And I think it's just the beginning. I think, as we've talked about earlier, I think policymakers, parliamentarians are more open to looking at this issue of green and sustainable circular economy. Asif talked about this issue around waste management as well. So you'll be able to see, and I think we'll start seeing more tax incentives coming through. I think also we've seen in other countries, and hopefully it'll become a mainstay, countries testing and central banks testing this issue of lower provisioning for green assets as a way to incentivize more green investment. So Asif, could you please touch on what you've seen in the regulatory space in terms of how central banks and capital market regulators are incentivizing green investment? Thank you.
In case of our country, we are providing incentive to the banks in 3 dimensions. First of all, we provide capacity building to our banks from our own, so that they don't have to put much investment from them on the capacity building for their employees and the borrowers as well. So we provide the capacity building from the central bank. Secondly, run a number of refinancing schemes so that they can access funds for providing green fund. So these are perpetual basis. And third is that we are regularly providing policies so that they can have a very clearer taxonomy and they have better understanding on how to mobilize their finances. So from our context, we are providing 3 contexts. First of all, capacity building. Second is low cost refinancing scheme, and third is the policy support. So these 3 ways we are providing incentives to the banks for the green financing. Sorry, so Louise can add a perspective. Louise.
Okay, thanks, Asif. Yes, I think, look, there there are very creative strategies being used by regulators and stock exchanges to incentivize things like green bond issuance. And I mean, that can include tax incentives. It also includes, helping to cover the costs of adding the green layer. So a green bond is a regular bond, but it has an additional green layer that's added. And that is an additional cost. And sometimes if the institution doesn't have those systems in place, that cost can make a difference. So in some jurisdictions like Hong Kong, Singapore, I think the focus has been on alleviating that initial cost. But I think what's important to add is we're starting to see green bonds and, for instance, sustainability-linked loans becoming an incentive of their own. So green bonds are in huge demand, so they tend to be oversubscribed. So investors are clamoring for these types of instruments. And so for state-owned enterprises or governments or companies that might not be able to raise capital easily due to other risks, sometimes the green bond, adding that green bond label, is actually a way to access finance. So it adds a level of credibility that attracts investors. And then in the case of sustainability-linked loans or green loans, the incentive is actually for the bank to reduce risk in their portfolio. So we're starting to see that there's less non-performing loans when it's a green or a sustainability-linked loan. And one example from South Africa is BNP Paribas did a loan earlier this year with Motus, a motor company. Now, this was pre-COVID, but they had chosen the company based on their sustainability reporting. And they'd seen that the company had their own sustainability goals. And BNP Paribas sees this as a way to attract good clients. So they had seen, we want to do business with green companies. And so they did a sustainability-linked loan based on Motus meeting particular green targets. And so banks like BNP Paribas see this as a strategy going forward.
Thank you for that. And you've actually raised a point that I want to point to Asif and Edward as well. When you talk about green loans have lower non-performance incidences. So what about the informal economy and what we are seeing in terms of how the informal economy has been impacted by COVID? There's lots of research around how in low and middle income countries, the COVID experience, it's almost been a tale of two cities, where you have the formal and the informal sector, and the informal sector being the most disrupted. And social preparedness being a key issue there, which makes policymakers really think about, and also private sector really think about this issue of the informal economy. How do we transition a critical mass from the informal to the formal sector, where of course access to finance is cheaper, where of course resilience is more enhanced. Maybe Edward, are you seeing any informal economy dimensions? Also within the informal economy, we know women make up the majority of SMEs within, or micro enterprises within the informal economy. Are you seeing any dimensions there from a sustainable finance perspective? Edward?
Yeah, well, thanks, Nuru, for that. And indeed, there is something to be taken out of that scope. And what we have seen is that it requires very deliberate kind of effort, very deliberate programming that then should be able to try and help these people in the informal, and actually not only informal. I mean, his informal sector is about women, is about youth, and it's about rural communities. And how can you be able to bring them into the mainstream? Well, in my view, there are two critical things that we need to do. One is, as we design our programs, they must be able to speak to those people. And indeed, that's why, for instance, within our organization, together with the European Union and the Danish government, we have come up with a specific program to fund women and youth in agribusiness value chains. Now, the whole idea is that we are trying to professionalize, move them a little bit from the informal sector and give them some formality, which then would allow them at a later stage to come to the banks. Of course, this program, the way it's designed is that you also want to get a lot of evidence, because that evidence then trickle down to my point number 2, which about the policymakers and speaking to policymakers. I like the fact that you are seeing that parliamentarians and people are seeing the green bond and they have a lot of interest in issues of sustainability. The only reason they have this is because they have seen it work. They have seen Aecon going into the market and raising money. And that is what I call evidence. So we have to have people who come in front of all these issues, they do stuff, and then that whatever they do become evidence. And then you start opening people's eye, and before you know it, well, things have already moved. So in my view, we have to look at those two perspectives as we program our projects, and also bank as you try to program and to design your products. Design products that speak to these people. Of course, they are more risky, they take more risk. They are more, I mean, what do I say? They are not as good as what you are used. So you have to roll your sleeve and go an extra mile. But then the beauty of it is that as you build those things, you are opening the eyes of many, including policymakers, and they will have policies that then will help us to push these trajectories to the next level.
Thank you so much, Edward. Asif, may I ask you what you're seeing in the informal sector in Bangladesh? Are you seeing a lot of disruption around COVID, and what policy interventions can you share?
First of all, definitely we have observed that the informal sector.
I'm not quite sure if it's my line. You're not very clear.
Yeah.
Okay, that's better. Thank you. Yes, that's great. Thank you. Yes, thank you.
So obviously, since the attack of the COVID, the informal sector in Bangladesh has been affected badly and adversely. Job loss and the businesses shutdown has been happened context of the informal businesses, and most critically, our economy is mostly constructed by the informal sector. So we are trying to recover the economy, informal economy, in various aspects. First of all, providing them some cash incentives from the government. Secondly, providing them bank loans and other financing at a cheaper cost. And thirdly, we are trying to digitize the every aspects of the banking transaction. So that, and for an example, in recent times, a bank in our country, where International Finance Corporation also is a shareholder, they have piloted digital credit in recent times, so that we want to provide very small digital credit, and they have collaborated with an MFS operator, and through the MFS operator they will provide very small loan just within short verification and very quickly to the very micro and very small businesses. So that these three ways we are trying to recover the affected the informal businesses and transform the informal economy to the formal economy in our country.
Wow, fantastic. Thank you so much. We have covered so much ground. I think now is time for us to start wrapping up our session. And really we thank our three presenters for sharing their perspectives. I'm going to ask each presenter to please, as you speak, you'll turn on your video and just kind of share with us your final takeaways as we wrap up. Louise, may we start with you? Any final takeaways?
Hi, yes, just opening my video. I think this has been a great discussion, and it's always inspiring. That's why it's nice working with the Sustainable Banking Network. It's inspiring to see banking associations like KBA and regulators like Bangladesh Bank that really are very practical and urgent around how you implement sustainable finance. I think I'm very encouraged to see that sustainable finance is still a priority, and in fact, becoming very much a focus in response to COVID. And I don't think it's just words. I think there are many ways in which a green stimulus or Build Back Better or the other different names that are being used, it is actually a moment to strengthen the systems that we found were weak, as COVID impacted us all. There are lots of resources that we could point you to for those who are looking for capacity building. So please do reach out to us, and please have a look at the report that we published, Necessary Ambition, which features Kenya and 7 other low-income countries, if you'd like to find out more about what they're doing. So thank you so much for the opportunity to participate, Nuru.
Thank you so much, Louise. Edward, may we ask you to share your final takeaways as we wrap up?
Thanks, Nuru, and thanks everybody for being here. And well, 3 key takeaways from me. One is that, Louise, the report that you've got about Kenya and of course these first 7 countries, I think that's a very useful document that any banker should be able to see where the opportunities are. Because indeed there is a lot of opportunities, and once they see those opportunities, for sure they can be able to kind of change their minds and be able to plug into it and see how they can be able to do things. Well, the second one is also about Nuru and the rest of the people who guys have been doing. I mean, it's just to show what few people can start, can become big with time and with dedication. And therefore, I'm calling everybody on this webinar that let's move away from this thing called NATO, you know, no action talk only. And once you go back to the banks, once you go to your organization, try and figure out which are some of those things that you can be able to do. And that way it will lead you to my number 3, which is becoming an evangelist for green financing and always preaching this gospel, because we need to convert as many as possible. And that's how we'll be able to avert things like climate change, and we will have better livelihood for future generations. Thank you.
Thank you so much, Edward, for your always inspiring thoughts. And yes, we'll become the choir, the Green and Sustainable Finance Choir. Asif, any final points?
Thank you very much.
Bit louder.
Hello. Am I audible? So it has been really enjoyable session for me, and very enriched, especially the presentation from the Louise, that the experiences from the different member countries of the SBN, and the fascinating presentation from Edward, that how different interventions happen in his end. And especially I fully in the similar tone with him, that that we have to be collaborative and cooperative. This is the greatest learning from this pandemic, that because sustainability has no option, this pandemic has shown us that sustainability will be the only option. This is the ultimate learning from this session and for us, and I'm really happy that happy to contribute to the session. And the only takeaway for me is that I'm really happy to see the aspiring stories from different corners, even in this pandemic situation, and their drive to collaborate with each other. That's a big inspiration for us. Thank you very much.
Wonderful. Thank you so much. And for me, really, it's just to sum up the key takeaways. This issue, Asif has really talked about it. Actually, we've all talked about this issue about collaboration. We've talked about the importance of regulators creating that enabling environment. And some of you, Samuel Robinson, have also raised this issue about incentives and the policy framework to really encourage more participation and action in sustainable finance. We've talked about opportunities for banks to learn, to build capacity, to partner with organizations, including KCIC and DFIs, to really just the organizations that provide the development aspect and bridge the entrepreneurs to your formal commercial finance. And then finally, we talked about the issue around the informal economy, which has really particularly been disrupted by this COVID experience. We all know, when we look at some of the lower and lesser developed countries, when you look at the GDP impact and the productive sectors, a lot of the work and a lot of the output is in certain counties or regions. So you don't have a balanced approach to how economies are structured and how production is happening, and therefore you see a lot of rural urban migration happening. So definitely this issue around the informal economy, around rural economies, how do we build back better in these sectors? It's a key issue. We know we're moving in towards a digital first framework. So therefore, what do we do with our rural brothers and sisters who might not have access to affordable electricity or affordable internet? How do we ensure that these businesses are able to continue to create jobs? So these are all these issues that we're talking about from a sustainable finance perspective. And ultimately, it's about not leaving anyone behind. Which is why the financial sector, together with development finance and policymakers, really need to look at how we can build back better, but make sure we don't leave anyone behind. We actually have done a great job, presenters. We've covered all the questions that have been raised, which is fantastic. And we're actually ending before time, which is even better. It's how bankers are. We're very efficient, which is awesome. Allow me to give a final vote of thanks to the team that's behind the scenes, starting with Holly and her wonderful children. Thank you for all that. And Yi, Rosalind Gino from KBA, we thank you as well. Eva as well from KBA. We also thank Rong and Batbolt from the Sustainable Banking Network, who have also been helping behind the scenes. And finally, we want to thank our three presenters today, Louise, Edward, and Asif. Thank you so much for your wonderful interventions and insightful presentations. Really, without any further ado, we are done. Thank you so much and have a wonderful day. Goodbye.
Nuru.
Bye.